Ethereum is transitioning to low energy consumption at a time of crisis, which could and maybe should in turn bump up demand and adoption. Bloomberg Sonali Basak joins us now from New York to explain. Do explain, Sonali.
Yeah, because it's interesting. It's not even just the energy usage here, Emily, you're seeing. There's a lot of questions on what the merge really did for Ethereum. And the reason we have to look at it is, are people trading Ethereum more on the fundamentals more than they are the macro story? And the answer is, if you look at it since the merge, it's about flat to down. But in the last month period, 1 month period, it is up nearly 15%. It is up pretty significantly over a 7-day period. So you are seeing some positive impacts here on Ethereum when it comes to pricing here. One of those reasons is that people believe that there is a more deflationary impact when it comes to Ethereum. That means supply is somewhat more pressured here, which would have an impact on the pricing. Now, Bloomberg Intelligence also has more information about Ethereum. They're really positive on the trends here in terms of usage over the longer term. Remember, the reason I bring this up, Emily, is because when I talk to my sources, not just in crypto, but in the banking industry, they're watching Ethereum really closely on what it could mean in terms of, the next cryptocurrency that could really help form a backbone to the financial system. So the more you see Ethereum succeed, the more you see more traditional players also be more comfortable with the network itself. Now, I think we should also kind of turn our attention here to kind of what this means for the broader network. I know we're going to talk about this in a second here, but the idea here that people are trading more on fundamentals and less on the macro story, I think, is really important to a lot of large investors. And there's some questions about how that is starting to form in the market, especially as you're seeing some more macro hiccups come to the forefront and inflation be as sticky as it is.
Bitcoin had a couple of strong sessions earlier this week. It's back above 20, and yet, we've had, several guests on this show saying it's going to go down to 12 or 13. Is it really decoupled from the rest of the market? Is this just a blip?
The reason that it's important to watch this at this point, to your point, it's held above 20,000. It's faced a little bit of pressure in the last 24-hour period. But again, that 20,000 level is a psychological level. It's an important level to hold on. When you talk to folks that were surveyed by Bloomberg, hundreds of people, they really say that it's not going to break in or out of a very large range. 12,000 would be lower than that range. So if you do see it drop to that point, then you do have a lot more psychological issues when it comes to trading Bitcoin, especially barring any large leveraged event like you saw earlier this year with 3 Arrows or anybody else. So to your point, if it were to fall that much, it would be concerning. But I think you also have to take note that you saw massive tech firms report earnings that were very disappointing. Yet Bitcoin holds up generally in the face of that, when Bitcoin has been trading correlated to the NASDAQ for a while. I'll refer back to Dan Moorhead and a note that he put out with Pantera just a couple of days ago, and that crypto has really traded a very low correlation to the S&P for most of its life. But in the last 8 months, it was very correlated to the NASDAQ. And he says that there are risk assets struggling, but there is a world where blockchain does well, and the S&P was down, gold was down, treasuries were down, and the Galaxy Crypto Index was up 7.3% in that same time frame. So again, near-term signs of decoupling. Does it hold is the main question for the market.